Hi there, Marianne Mosessel here from Coldwell Banker and coming to you on this sunny day. And I'm sure a lot of people are home today and are kind of getting used to what's kind of happening in our changing world. And I've noticed too that there's a new language out there that we haven't heard about before. And the last couple of weeks we're hearing things like social distancing, and the situation is liquid, and people are being furloughed. So the other thing that I was finding is that a lot of videos, and I've been inundated with videos and emails from the National Association of Realtors and our local Board of Realtors, our state Board of Realtors, and I don't know about you, but I'm just overwhelmed and just overloaded with information. But there was something that came up in the last couple of days that I think is really important for those people that are laid off and are concerned about paying their bills, mainly their mortgage, because that's probably most likely your largest bill that you have coming up maybe on the first of the month. And we're hearing all kinds of things about the stimulus package, and what they're saying is that the government is saying to mortgage companies and banks that you're not going to be required to have to pay your mortgage. So what I want to really point out, and it's very important, that what another word that we're hearing is that forbearance. So what forbearance means is that after most banks are allowing up to 3 months for a forbearance. So if you apply and you call your bank, or they send you an application to apply for forbearance, what that means is you don't have to pay your mortgage for 3 months, yay, but it also means that that full amount is due at the end of that 3 months. So that's, to me, a little kind of deceiving and not really clear. It's a little bit different than a deference. So what I'm hoping to see in the marketplace is that maybe the forbearance isn't going to work, that they're going to have to call for and allow for deferment. And what a deferment means is if you don't pay that mortgage for 3 months, they're going to add it on to the back end of your loan. And so whenever that time is, that you have to pay that off. So that will really help people with their bills. A forbearance is not really going to be that helpful, because if after the end of that 3 months you have this large payment due, you're still not going to have it, because we may not even be in a place where people are back to work. So I want to be really clear on that. If you're dealing with your bank and they're telling you they're going to allow you forbearance, please know that it means that it's going to be all full and due at the end of that 3 months. So they're also going to tell you that it's not going to affect your credit. I hope that's true. A lot of millennials that did not live through the financial crisis in 2007, where they said it wasn't going to affect your credit, and then it did. So when you're calling your mortgage company or lender, be very clear about what they're offering you, and take down all the information about who you talk to, whether it's going to be a forbearance or a deferment, preferably a deferment, but I don't know if all banks are doing that right now. I think that they want to get away with trying to do a deferment, or the forbearance, but you really want them to get a deferment for you. So I hope that helps. If you have any questions, please message me, call me. I'd be happy to walk you through that and help you in any way I can. Have a great day.